everyone, this is Kishore. Welcome back to my channel. This week is going to be a short week and also a quad witching week. I'd like to share my index analysis and what are the possible outcome for this week. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. CNN Fear and Greed Index, the sentiment is fear. Even though SPY and QQ are up, the sentiment is went from neutral to the fear from last week to this week. And this is weekly heat map for ETFs, technology sector, and semiconductors both perform really well. And also the TLT and TMF, the bonds are bounced because of the CP and PPA, good soft data. And this sector performance, technology sector is up by 5.6%, real estate is up by 1.4%. As an whole, SPY is up by 1.54%. And this core inflation rate, month and month history, it came down to the 0.2 level, which is good, really good. It is came better than the expected one. And I shared my analysis last week, like how the CPI is calculated, and also what are the sectors are very important. One is mentioned like housing sector. So if you clearly see it in this one shows like which are the sectors are having high inflation, which are the having lower inflation. Auto insurance is the top one, which is having 20.3%, and then rent and housing. So as expected, rent and housing are high. If they come down a little bit, then really helps the CPI to go down. And the other one is energy. The gasoline is down a lot in the April to May. So that is one of the factor that helped the CPI to come down. But right now the crude oil is at a very good support level. If it bounces from here, then again next month inflation we do not know like how it impacts. And the inflation really helped is used vehicles minus 9.3 and rental costs minus 8.8%. These two helped the CPI to come down. And this is another way to look into the CPI. CPI 3 month changes annualized rate, it is 2.8%. But if you remove the housing sector, like shelter one, it is then 1.7%. So it's very visible like how the rent or housing sector is impacting the inflation. And this is history does not repeat, but it rhymes, even in inflation history. So there is some kind of comparison happening between 2014 to 2024 and also the 1967 to 1985. The thick blue line is 1967 to 1985. It came, and the light blue line is CPI 2014 to 2024. It really following the 1967 to 1985 uh, the graph. So right now we are here. So based on this, by looking at the history, there is a high chance to bounce from here. But we do not know how the crude oil or housing sector at that time, and also the CPI calculations changed a lot from 1999 to 2024. So I do not take it this graph as is, just the reference I'm sharing here. And this is another Fed plot. So economic projections of Federal Reserve board members and the Federal Reserve Bank presidents. So they are saying that in 2024 it's like 5.1, and 2025 is 4.1, and 2026 is 3.1. The median ranges they are targeting. Out of 19 members, only 7 members said there is only one rate cut, and 8 members said two rate cuts, and 4 members said there is no rate cut at all. So we know that at the year beginning they said like four rate cuts. The media said there is a four rate cuts. At the time also I shared the dot plot said that there is no data saying that there are four rate cuts for 2024. Same thing, the dot plot is saying only either one or two rate cuts for this year. And this is 2 year bound. So the CPI PPI data came really good, better than the expected. So the yield was down. So this is a good indication there is a high chance of rate cuts soon. So I shared this chart last week also comparing the Fed fund rate and also the 2 year yield. So 2 year Fed fund rates follows that 2 year yield chart. So if it goes down here, then we can assume the Fed rate cut will do either in July or September. I'm thinking in September. As I said earlier, the crude oil, if it bounces from here, then again the inflation bounces back, because still the housing sector is the hot sector. There is no signs of weakness in the housing sector. And this is another way to look into the how a Fed rate cut impacts the market. If Fed rate cuts starts the cutting the interest rates, then really it helps the small caps. Small caps do really good in next 3 to 6 months. So this chart says small caps typically outperform in the next 6 to 12 months after the first rate cut. So the black line, vertical line says that that's first rate cut. From there you can clearly see in the six months it's almost like more than 50% up. And and then after 12 months it is up by 70%. And this IWM SPY ratio, it is like it's almost like year 2000 lows. So IWM is down a lot this year. We can last 2 years we can clearly see by looking at this chart. And this is like performance versus S&P 500 rankings. So Morningstar fund managers, they divided the equity stocks into different sectors and different size and style. So if you see, if this is a year till date, only large cap growth is up by 7.4%, and all other size and value are down. And especially small cap value is down by more than 15%. Similarly, depending upon the different types of style like momentum and growth, only and low volatility, high dividend yield, value and small cap. Small cap is down by 15%, and momentum and growth, both of them are up by 8 and 4.8%. So by looking at this, we know that the money is going only into the large cap growth and the momentum stocks, not the small cap or the medium cap stocks. And even more magnificent. So as I see in the previous slide, only large cap is performed really well this year. This one shows like how Magnificent Seven is performing the in the market. So the big seven tech platform stock market dominance is at the new peak. So it is up by 32.3% in the till now. So the weightage of the Magnificent Seven S&P 500 is very heavy right now, and this is like market leadership. The gray line is S&P 500 top 10 stocks and the top 10 cap stocks, and the orange line is bottom 490. There is a huge gap between these two, like 2100 SPX points. This is never ever before in the past in the history this much of gap. And the SPY daily chart, if I draw a Fibonacci level from 524 to the 493, the 1.618 Fibonacci level is 544.08. It last week it hit that level and then rejected. And the candle also is kind of a topping, spinning top kind of candle, which is a reversal candle. So 537 is having some gap and also the Fibonacci level. If it breaks that 537 level, there is a big sign. There's a high chance SPY can go down to the 524 level, but right now it is looking good based on this chart. And this is another way looking at the SPY. If I say it's a cup and the breakout here at the 518 level and the retested at 518 level and then jump it from here. If we take this as a measured target, the cup measured target is 540, which we already crossed it. And this by weekly chart, so the candle is good. We made a new high this week, and the volume is good, higher than the previous week volume, and the RSA is good, and MACD is like a pancake, flat pancake. But by looking at the candle and volume and RSA, the chart looks good to me. But if you see RSP underneath of S&P, only few stocks are performing well. That's the reason SPY is going up. But RSP is the equal weight of S&P, and it is going down. And this is a weekly chart. SPY made a new higher high, but RSP made a new lower low. So this is the negative divergence and with the high volume on the red candle. So this is not a good sign for the market breadth. Market breadth is negative divergence with the S&P. And this is number of percentage of stocks about 20-day moving average in the S&P. So that is right at 32 level. And 14.95 is, I always look into that 14.95 or 15 level to as a buying opportunity for me, and 86 is the selling opportunity. And this is NYC advanced decline line below one, and the upper one is S&P 500 large cap. So there is a huge divergence here right now. It is a huge divergence happening. Similarly, it is happened in the year 2022 December and January. After that, we know that market went down a lot. And this is days since an S&P 500 decline of 2%. So it says that how many days between S&P is down 2%. So it's been 329 days. S&P is down more than 2%, which means it is the trend is very strong. The bullish trend is very strong. The liquidity is there. We know that it's going into the limited amount of stocks only, like mega cap stocks or the semiconductor stocks. Even though whatever it is, the market is going up. So it happened very few times from 1980, like 747 days in the 1984 time, and also in 1994 there is 526, and in 2004 and 2006 there is a 949 days. After that 351 in 2018, and right now 329 days. And this QQQ daily chart, this also looks good to me. The volume is okay, not bad. RSA is going up, MACD is going up, and the candle is bullish candle. And this QQQ weekly chart, super bullish engulfing candle, this one, but with a lower volume compared to the previous week. So that is a little bit concern to me. And RSI is going up and MACD is also going up, which is good. So by looking at this chart, it is really look good for the bulls. But if you see the QQQE, QQQ made a new higher high, but QQQE equal weighted of QQQ did not made it. So it again it says there is a negative divergence in the underneath the market breadth, and this is the NYC advanced decline line. The below and the above one is Nasdaq 100 stocks index. So this is also same negative divergence here, and the similar kind of thing happened in the year 2022 December and January. And this IWM the weekly chart. So this is the bad hit very bad in this week. Even though CPI data, PPI data came very well. I mean better than the expected one, and also yields are down. We clearly see that 2-year yields are down, and TLT and TMF are up. 20-year bonds are up. Even though bonds did good, IWM small caps made a lower low compared to the last week. So this is a little bit concern to me, but it's a very good support level right now. If it breaks 198 level, then it can easily come to the 190 level. And this HYG, so I see this chart to look into the liquidity perspective, where the market is liquidity is coming to the market or not. So right now within this range, like about 76.48, so I'm okay with it. But if it breaks down, then it's a big sign to the market. There is a high chance it can go down. And this is S&P 500 companies blackout period. So I shared this chart in April at the time of first quarter earnings. So when their earnings are starting, there is a blackout period of the buyouts, buybacks. So 2-3 weeks buyback blackout period is there. So similarly now it is going to be started. So next couple of weeks there is no buybacks. And the summary is market index is grinding higher with a handful of stocks. You can clearly see in the factor analysis chart, only large cap growth stocks are doing good. Market breadth is not looking good. So at NYC advanced decline or equal weighted index are showing the negative divergence compared to the indexes. Negative divergence building shows signs of weakness. So it shows the signs of weakness, but it's a caution only. It's not saying that market will go down. It's a caution sign. Having a tight stop prices for the bulls is a good thing. Rate cut helps small cap to bonds. As I shared that historical chart, like the analysis, if after first rate cut, next 6 to 12 months, small caps do good. But even the CPI PPI data came good, they did not perform well this week. So we need to see why it was down, even though CPI PPI data are good. So a little bit need to be cautious on the small cap now. And quad wick and short wick may bring some volatility to the market. So as Jim Carson says, at the time of quad witching, the volume unpins. So all the volume expirations takes place, all the money settlement happens. So new options are open after the quad witch. So at the time, market may uh, turn the trends like a bullish to the bearish or bearish to the bullish. It was happened a lot of times in the past. So quad witch weeks are very important for the trend reversals. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please hit the bell icon so that you'll get notification when I upload a new video. Please share to any of your friends looking similar kind of content. Thank you so much. Bye bye.